Вместе с тем, в рамках сотрудничества со странами БРИКС мы работаем над созданием собственного платежно-расчетного контура, что создаст условия для эффективного и независимого обслуживания всей внешней торговли.
The global financial system just changed forever, and the West is powerless to stop it. For years, the US and its allies have relied on financial sanctions to pressure their rivals. But now, China and Russia have unveiled a bold new banking system designed to bypass Western control and threaten the dominance of the US dollar itself. Will this be the final blow to the West's financial control? Could this new system trigger a global economic crisis? And most importantly, how will this impact you? Now, let's backtrack a little to how everything led to this point. It's common knowledge that, for decades, the US dollar has ruled the global economy. Almost every country in the world has depended on it for trade, investments, and even storing their national wealth. But now something big is happening. China and Russia are making serious moves to challenge the dollar's dominance. If they succeed, it could change the financial system as we know it. But before we get into what they're doing, let's break down why the US dollar became so powerful in the first place. So, let's imagine you run a business and you make a deal with someone in another country. The problem is, your currency might not be accepted where they live. That's where the US dollar comes in. It has been the default currency for global trade, meaning countries trust it more than any other. One of the biggest reasons for this is oil. In the 1970s, the US made a deal with Saudi Arabia and other oil-producing countries. Sell oil in US dollars only. This forced almost every country to keep large amounts of dollars just to buy oil. Over time, this made the dollar the most used currency in global trade. Another reason is stability. The US has one of the strongest economies, a powerful military, and a banking system that until recently was seen as safe. This made countries trust the dollar more than any other currency. But the thing is that China and Russia have been frustrated with how much power the US has over the global financial system. Their biggest problem is sanctions. The US has used the dollar as a weapon. If a country does something the US doesn't like, it can cut them off from the global banking system. This means they can't do business with most of the world, which can destroy their economy. Russia is a perfect example. After it invaded Ukraine, the US and Europe froze $300 billion of Russia's money that was stored in Western banks. Russian companies were blocked from using the SWIFT banking system, which is how most international payments are made. This was a huge blow to Russia's economy. China is watching this closely. It knows that if tensions between the US and China get worse, especially over Taiwan, the US could do the same thing to them. That's why both China and Russia are now working together to build a new financial system that doesn't rely on the US dollar. They've actually been working on this for years, but now they're taking things to the next level. Here's how. Instead of using the dollar, Russia and China are doing business using rubles, Russia's currency, and yuan, China's currency. This means they don't need to go through the US-controlled banks. They are also creating their own payment system. Right now, most global payments go through SWIFT, which is controlled by the West. But China and Russia have their own system, called CIPS, China's cross-border interbank payment system. More countries are starting to use it instead of SWIFT. They're also working with other countries like India, Brazil, and Saudi Arabia to trade without using the dollar. The goal is to make the dollar less important worldwide. And that's not all. Both China and Russia have been buying huge amounts of gold to back their economies. This is important because if people lose trust in the dollar, these countries want to have something valuable to fall back on. Now, if China and Russia succeed, the US could lose one of its biggest sources of power. Right now, when countries trade in dollars, they often store their money in US banks. This helps fund the US economy and government. If fewer countries use the dollar, the US could face higher inflation, weaker economic growth, and even trouble paying off its debt. And it's not just about money, it's about control. If countries stop using the dollar, the US will have a harder time pressuring other nations through economic sanctions. It would lose a major tool of influence over the world. But there's a dark side to this. If the dollar loses its power, it won't just affect the US. It will shake up the entire world economy. Some countries might benefit, but for many others, it could be a disaster. Let's break it down. Right now, the US gets massive benefits from having the world's most powerful currency. It can print money without worrying too much, because other countries need dollars for trade. But if the dollar weakens, that changes everything. If fewer countries use the dollar, there will be less demand for it. This could cause its value to drop, making everything in the US more expensive. And that's not all. The US owes trillions of dollars in debt. Right now, it can afford to borrow money easily because the dollar is strong. But if that changes, borrowing could get a lot more expensive. The US might also lose some of its economic dominance, meaning fewer investments, fewer jobs, and slower growth. Right now, most Americans don't feel the impact of the dollar's global dominance directly. But if it weakens, they'll start to feel it in higher prices, a weaker economy, and a government struggling to pay its bills. Amidst all this, a bigger question looms. If the dollar falls, who takes its place? That's the big question. Most people think it's China's yuan. Look at it this way. China is the second largest economy in the world, and it's pushing hard to make the yuan a global currency. But many countries don't fully trust China's government, so the yuan might not completely replace the dollar. Although the BRICS nations Brazil, Russia, India, China, and South Africa have talked about creating a new currency for global trade. If they succeed, it could seriously hurt the dollar's dominance. At this point, many countries are moving back to using gold as a foundation for trade, especially as trust in paper money decreases. Basically, the world could move into a multi-currency system where no single currency dominates like the dollar does today. This would make international trade more complicated and unpredictable. It's also important to remember that right now, many countries hold large amounts of US dollars in their central banks. If the dollar weakens, these countries could lose billions in value overnight. One of them will be oil-producing nations that have depended on selling oil in dollars for decades. If that changes, they'll have to adjust their economies fast. It's also important to note that many poor countries borrow money in dollars. If the dollar collapses, their debts could become impossible to pay. Also, many of America's closest allies, like Japan and Germany, have economies that are deeply connected to the dollar. A weaker dollar could make them more vulnerable. So, while China and Russia might benefit from challenging the dollar, many other countries could face financial chaos. This could trigger a chain reaction of economic disasters, shaking the global financial system to its core. One of the first major impacts would be a stock market crash. Since a huge portion of global investments are made in dollars, a sudden collapse in its value could cause widespread panic. Investors would rush to sell off their stocks, fearing massive losses, which could lead to market collapses not just in the US, but across the world. Banks wouldn't be spared either. Many financial institutions hold enormous amounts of dollars in their reserves. If trust in the dollar crumbles, banks could face liquidity crises, struggling to meet withdrawals and even going bankrupt in some cases. This would send shockwaves through the financial sector, triggering bank failures and making it even harder for businesses and individuals to access credit. At the same time, inflation could spiral out of control, not just in the US, but globally. Since so much of world trade relies on the dollar, a move away from it would disrupt supply chains and drive up prices for essential goods. Countries that depend on dollar transactions for oil, food, and raw materials could see their costs skyrocket overnight, leading to economic instability in regions already struggling with high inflation. Now that we've looked at what could happen if the dollar loses its power, the big question is, can the US stop it? Because let's be real, America isn't just going to sit back and let China, Russia, and their allies take control of the global economy. The US is doing everything it can to hold on to the dollar's dominance. But here's the problem. Some of its strongest economic weapons are starting to lose their power. One of the biggest things keeping the dollar strong for decades was America's deal with Saudi Arabia. This deal, made back in the 1970s, was simple but powerful. Saudi Arabia agreed to sell its oil exclusively in US dollars, and in exchange, the US promised to protect Saudi Arabia militarily. This was the birth of what's called the Petrodollar system, and it forced every country that needed oil to buy dollars first. It created a constant global demand for US dollars and gave America an enormous advantage over other countries. But here's the problem. That deal has expired, and Saudi Arabia isn't renewing it. Instead, They're making new agreements with China, Russia, and even India, allowing them to buy oil in their own currencies instead of using the dollar. This is huge because it means fewer countries need to hold US dollars, weakening its power over time. For decades, the petrodollar system kept the US economy stable and allowed America to run up massive debts without facing immediate consequences. But now that Saudi Arabia is no longer bound by that deal, the dollar's grip on the world is slipping. The US government knows this is a serious threat, and they've been taking steps to slow down the process. One way they're doing this is by putting sanctions on countries that try to move away from the dollar. That's why we've seen heavy sanctions on Russia, Iran, and even threats against China. By punishing countries that ditch the dollar, the US is trying to scare others from doing the same. But the problem is that this strategy isn't working as well as it used to. Instead of isolating these countries, the sanctions have pushed them closer together, making them even more determined to create an alternative to the US-led financial system. At the same time, the US is still using its military power to maintain control. Many of the wars and conflicts in the Middle East and around the world aren't just about politics. They're also about protecting the dollar's dominance. Any country that tries to challenge the dollar often finds itself facing military pressure or sudden instability. But even this strategy is losing effectiveness because global alliances are shifting. More countries are questioning US military interventions and looking for ways to become independent from America's influence. The US is also trying to strengthen alliances with its traditional partners like Europe, Japan, and South Korea. The idea is that if they stick together and keep trading in dollars, it will slow down the rise of alternative currencies. But even here, cracks are forming. Europe is facing economic troubles, Japan's economy has been struggling for decades, and South Korea is caught in the middle of tensions between the US and China. None of them want to fully abandon the dollar, but they also can't afford to ignore what's happening. If China's economy keeps growing and offering better trade deals, even America's closest allies might start shifting away from the dollar bit by bit. The truth is, the US still has a lot of power left, and the dollar isn't going to collapse overnight. But the cracks are forming, and they're getting bigger and harder to ignore. The expiration of the Saudi oil deal is a major turning point, and the rise of digital currencies, BRICS alliances, and de-dollarization efforts around the world are signs that the global economy is entering a new era. If the dollar eventually loses control, we will be looking at a multipolar system where different currencies start competing in different parts of the world. China, Russia, India, and Brazil are all working on ways to trade with each other without needing the US dollar. That means more deals in yuan, rubles, rupees, and even digital currencies. The euro will still play a role, and gold is making a comeback as a preferred store of value. In short, the world is moving from a dollar-dominated system to a mix of regional powers controlling their own trade. Now, who benefits the most? The clear winner in all of this is China. They've been preparing for this moment for years, slowly but surely increasing their trade in yuan, making deals with countries in Asia, Africa, and South America, and setting up their own financial systems that don't rely on the US banking system. They've even convinced the Saudis to start accepting yuan for oil, something that would have been unthinkable just a decade ago. If more countries follow that path, China becomes the biggest financial powerhouse in the new system. Russia also stands to gain, not necessarily as a global economic leader, but as a key player in breaking the US financial monopoly. The Western sanctions pushed Russia to develop its own financial networks, strengthen ties with China and India, and rely more on gold. And let's not forget India, one of the fastest growing economies in the world. India is playing it smart by keeping one foot in the Western system and the other in BRICS, making it a bridge between different economic powers. If the dollar weakens, India will have more freedom to do business on its own terms. But for the Americans, this is a nightmare. They will experience economic disruption. Prices for everyday goods could skyrocket, borrowing money could become much harder, and foreign countries would stop funding America's debt like they used to. The government would be forced to either make massive spending cuts or print even more money, making inflation even worse. Either way, it would mean a lower standard of living for many Americans. But here's where it gets really dangerous. When economic decline starts, political instability follows. If history has shown us anything, it's that when superpowers start losing their financial grip, they often turn to military force as a last resort. Could the US go to war to protect the dollar's dominance? It's not impossible. After all, wars have been fought over far less. And with tensions already rising between the US, China, and Russia, the possibility of a major global conflict can't be ignored. So, what does this mean for the average person? It means we're living in a time of massive change, and whether people realize it or not, the old financial system is fading away. A new one is being built right now, and it's not controlled by the US anymore. Countries like China, Russia, India, and Saudi Arabia are already getting ready for a world without the US dollar. They're taking steps to protect themselves. But the real question is, what about America? Will it be ready, or will it be caught by surprise when the dollar finally loses its power? Because at this point, it's not about if the dollar will fall, it's about when.